welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our live feed and we'll have your queries addressed by our technical expert. Before bringing our guests on board, let's see what the global handover looks like, and it's definitely a strong one from key global markets. On Friday, you saw European stocks close higher, bearing some of last week's losses after weaker than expected data from China fueled fears of a global economic downturn. Stock 600 rose 1.8% by the time it shut shop. Other bourses also came in the excess of 1.5% each. On Wall Street, stocks rallied on Friday in response to bank earnings and promising economic data as fears of a 100 bips rate hike from the Fed Reserve to subdue rising inflation subsided. Dow climbed over 650 points, S&P 500 jumped 1.9% and Nasdaq bounced 1.8%. Though despite Friday's rally, major averages closed out the week with losses. Stocks in Asia Pacific rise this morning on back of a strong handover from Wall Street, and South Korea is leading the gains. And for our own markets, SGX Nifty indicates a gap up open. Back home, there's HDFC Bank's numbers to watch out for. Asset quality weakens on a sequential basis. The bank also sees high slippages in agri, land and corporate loans. Higher operating expenses hit earnings. We discussed the top highlights of India's largest private sector lenders' Q1 numbers on the show, along with putting the spotlight on other earnings candidates BEL, ICICI Prudential and Just Dial. Okay, let's get going and talk technicals with our guest Kunal Shah, joining us from LKP Securities. Good morning, Kunal. So gap down uptick is what we're looking at. Can we sustain that momentum? What's the chart indicating?
Good morning, Karunya. I think since the start of 2022, we have seen a very sharp correction in the market. So the first half of the year 2022 was quite painful for investors as well as for the traders. But I think now the second half has started on a positive note. We had concerns on the Russia-Ukraine war crisis. We had the inflation concerns which were going on. But if I look at the charts right now, the market has quite a bit priced in everything, whether it's an inflation, whether it's the Russia-Ukraine war. The chart shows that the index is forming a good base on the downside. It's a consolidation phase which is going on for a rally on the upside. So on the daily chart of Nifty, if I talk about, we have a higher high, higher low formation happening. That means Nifty is in a strong uptrend, which clearly indicates on the chart. We have seen a good support around the level of 15,700, 15,800 zone. And as long as these levels are held on the downside, expect further rally on the Nifty index towards the levels of 16,250 to 16,350. So now 16,300 has been a resistance zone for the Nifty on the upside. And today, if we close above that level, which is very important, if that happens, we are going towards 16,600, 16,800 levels on the upside. So the momentum remains bullish. I think the painful period is over. Now is the time when everyone will get a sigh of relief that yes, market is making a base on the lower end, and we might see levels of 16,600 to 16,800 coming on the upside. But this is just a trading move, what we'll be getting. 16,800 was a hurdle earlier from where we had eventually break down. So that is a resistance for us on the upside. We need to see going forward if 16,800 above levels are hold, we might see continuation of this rally on the upside. But for the near term, specifically for this week, market looks bullish. 16,600 to 16,800 is what I'm looking out for.
Okay. I want to ask your view on HDFC Bank as well. Big earnings that came by during the weekend. HDFC, well, the asset quality is something that could, mar the sentiment a bit. But largely, brokerages continue to be bullish. They've retained the buy call. Target prices are unchanged. Talk to us about the technicals and how do you see it playing out?
See, if I talk about HDFC banks, it means in the last 1 year or 6 months, so it has been a massive underperformance. If I look at the daily chart of HDFC Bank, it is in a broad sideways consolidation which is going on. On the upside, 1400 is a strong resistance, and on the downside, 1250 is a strong support. So this has been a consolidation range for the last 1 to 2 months. So you can say again, it is in a base formation which is happening, might even consolidate for some time even going forward. Above 1400, the actual gates will open up for HDFC Bank, where it can rally toward the levels of 1550, 1600 kind of a zone. So I'm more or less sideways to neutral on HDFC Bank for the current levels. 1400 is the level which one should watch out for. Once that is taken out, the real strength will start from those levels.
Just stay on with us, Ashutosh. I want to also invite Ashutosh Mishra from Ashika Group to talk about HDFC Bank's earnings, because that's definitely going to be the cynosure of all eyes. Good morning, Ashutosh, and thank you for joining in. What has been your verdict with regard to the Q1 performance?
So Q1 performance, if you look, absolutely, it was in line with estimate, but there are a few concerns which is getting emerged out of the whole earnings. So one of them, if you look at, is their cost to income. They have guided for the higher cost to income ratio going forward from here. So further, their slippages were relatively higher on a quarter-on-quarter basis, and this time, apart from agri, which is now getting a more of every year, first quarter, normally we see higher slippage from agri. We are also seeing the corporate slippages coming from the restructured book in this quarter. And if you look at NIMs and NI, we were expecting the banks to improve on that parameter, but again, NIMs was a little bit disappointment compared to what we were expecting it. So keeping this thing in mind, we clearly see that there is one very challenging task is ahead for the banks. That is converting a very large NBFC balance sheet into the bank balance sheet of its parent in the next 6 to 12-month period. And in the current given scenario, it will be quite challenging for bank to deliver, especially on a profitability front. Growth is okay. Growth, there is no issues on the growth front when I look at HDFC Bank. But when I look at profitability, both on the NIMS front, both on the OPEX front, I see clearly some challenges emerging, and that's why we have downgraded the stock from the buy to the neutral.
Okay. What about provisions? Do you expect that there will be a further decline going forward in terms of provisions? And even the asset quality woes that you were talking about, is the worst of it over, or do you foresee some pain in the coming quarters also?
So here, if you look at asset quality, your last question. So HDFC Bank has grown their corporate book very aggressively in the last 3 years. We have, and that has started maturing at this point of time. So we have, and this is the first time we have seen the corporate, relatively larger contribution of a corporate NPA in overall NPA. And the write-offs numbers were also quite high. So yes, there is some question mark is there. I will not put it as a concern, but there are some question mark being raised where bank has grown their corporate book in the recent last 3 years aggressively, and we have started seeing some NPA flowing in from that. So we need to monitor this there. I don't see this emerging as a risk. More risk is on the NIMS front because conversion of the balance sheet and there the requirement of the PSL loan, CRR, SLR requirement there, and higher OPEX, which they are clearly guiding in this quarter.
Okay. The near-term, overhang definitely is going to be the impending merger. Talk to us about how are you guys reading into it, and ahead of the merger, from an investor standpoint, what should they do? Should they invest in, HDFC Bank, HDFC Limited, or should they first let this pan out and then look at, entering?
Yeah. So on the first week of April, when they announced the merger, scenario was a bit different compared to where we are standing today. In between this, post the announcement of the merger, one of the important features which management has also discussed that liquidity condition is quite good, interest rate is at a relatively lower level. Both these conditions has really changed. We have seen system liquidity has tightened quite a lot. RBI has taken unprecedented increase in 90 basis point increase in the repo rate, and that is getting transmitted on the both deposit and asset front. So in this condition, and we are expecting further rate hikes in the coming period too. In this condition, when we look forward, the converting such a large balance sheet, where on the day one of the merger, you have to pay off all the banking liability of the HDFC Limited, and you need to raise such a large deposit. If you it's look a bit challenging than what it was there on the announcement time. So that is where we clearly see a lot of headwinds are there for the bank, at least for the next 6 to 12 months period out there. Any long-term investor, if you're taking a 2-3 year call, they can stick to it. But in short term, I expect the banks to underperform the other industry peers.
Okay. All right, Ashutosh, many thanks for joining us then. Let's see how the brokerages, the street reacts to HDFC's Q1 report card. But this is what it is. The numbers look largely okay. But yeah, there are slight pain points in terms of asset qualities, in terms of NIMs that have not come on at par with what the street was expecting. Okay, Kunal, back to you once again. Want to know your view on other earnings candidates as well that could be in the limelight. First up is Bharat Electronics. Last 5-6 weeks, it's been a largely range-bound trade in that 10-20 rupees range, for the investors and even for traders. Do you see some momentum coming by now that the earnings have also been reported?
See, I think, Karuna, if I look at the defense as a space, it has been one of the space of 2022 where people have made good money on the defense space. And if I talk about the Bharat Electronics specifically, the chart setup looks extremely good in all the time frame, whether it's a monthly, weekly, or a daily time frame. So on technical, the setup looks very good. Where the market has seen a sharp correction, this has been exactly in the opposite trend, where still an higher low formation, that is a strong uptrend, has been still intact on BEL. So I think this could be again, as I said, once the market is looking good, this will be an outperformer. So definitely one should add it over here. BEL, a very good entry point. On a daily chart, a triangle kind of a formation has been formed, and we had seen a breakout on Friday's trading session. And definitely the results are up. So here the volatility would be there, but I think the setup looks very good. It is ready to go to its all-time high levels. What I expect on the upside is the stock to test the levels of 265 to 270 on the upside. So the lower end base is formed at 225, 230 zone. So definitely one can initiate a buy from the current levels as well.
Looks like an interesting candidate to watch. Then there is also ICICI Prudential that delivered its numbers. Standalone profit came in at close to 156 crore rupees versus a loss of 185 crores in the same quarter last year. So a good turnaround story there in terms of the standalone performance. Premium income has grown 4.3%, coming in at 6,884 crores. Let's talk about the technicals of ICICI Prudential. From the June highs of close to 570 rupees, the stock has come off a fair bit, 60-70 rupees off from those levels. So talk to us whether this could provide a good entry point, or do you foresee some more consolidation here?
See, I think life insurance as a space has been consolidating since a long time. I think if I take the data of the past 6 months, whether it's an HDFC Life or an ICICI Prudential or an SBI Life, all the three have been consolidating in a sideways trend. Specifically, if I talk about ICICI Pru, it has been a big underperformer compared to HDFC Life and SBI Life. So my top pick on this life insurance space would be SBI Life. But if I talk about ICICI Pru, the stock is again in a sideways consolidation phase. On the weekly chart, if I see on the upside, 572 is a resistance zone for the stock, and on the lower end, 485 is a support. So probably this is a long consolidation which would continue to happen in ICICI Pru as well. From the current levels, my view remains bullish. One can buy with a good support of 485. I am expecting it to test the level of resistance on the upside, which is placed at 570, 580 zone. So the view remains bullish from the current levels as well.
Okay, all right. The third stock, the third earnings candidate we want to talk about is Just Dial. They've reported a loss of 48 odd crore rupees because of mark-to-market losses. Largely, this net loss has been driven by negative other income. Operating revenue at the same time has grown 12% year-on-year, coming in at 186 crore rupees. Now, Just Dial, once again, like many of its peers in the tech space, has been consolidating a fair bit. While the last 1.5 months have been stable for this counter, from the April highs, it has corrected quite a bit. I think it reached a peak of 915 or 920 rupees, and right now it's at 580 levels, or actually sub 580 levels. Do you think there is some more, weakness here before it actually meaningfully sees a bounce back?
See, I think if I look at the chart of Just Dial, it has been a massive underperformance. Looking at the chart on all the time frame, whether it's a monthly, weekly, or a daily, it's an absolute downtrend. Weakness continually keeps on persisting in the stock from the current levels as well. So I think definitely the view stands bearish. No need to add even for a long-term investor at the current levels, and even not for a trading bet for the current week. So my suggestion would be an absolute avoid at the current levels for Just Dial.
Okay, all right. Sure. So a lot of questions also coming your way. Not necessarily all of them are earnings candidates. So let's see which ones to address. Vamsi Krishna wants to know about ONGC. In fact, Shakti also has posted to us and wants to know your view on ONGC. So let's address that first. What would be your advice here and your assessment of the chart?
See, ONGC as a stock has been news-based. Again, there was some uptick and momentum which had started to build up in ONGC on a daily time frame as well. But with the recent news, what have been the windfall taxes which have been announced by the government, so ONGC was one of the stocks which took a hit because of that. Specifically, if I talk about the chart perspective, ONGC still looks weak to me. The stock, after a good run-up rally, has breached the crucial support zone. And on the lower end, if 120 levels are taken out, that is where fresh shells would be initiated, because that was an earlier acting as a previous support for us. And if that support of 120 is taken out, expect the stock to even test the levels of 100 and even go to sub 2 digits levels as well. So my view remains bearish on ONGC. I think it's a sell on rise candidate. Any rise you get into the stock, that would be an ideal opportunity to again short it with a resistance of 140, 145 on the upside.
Okay, all right. Next up is a query on Jindal Steel and Power. Emmanuel Matthew wants to know your view here. This one also delivered its numbers on Friday. In fact, it shut shop with a loss of almost 4.5%, on Friday's session. What kind of an action do you foresee here? Because yes, while the stock has seen a good recovery from its recent lows of, I think, 305 rupees odd, there is still a fair amount of volatility that we're seeing in many of these metal names. So what is it that you forecast here for JSPL?
See, I think metal as a space has been a massive underperformance. I think the commodity rally, which was there from 2021, has cooled down quite a bit. And this has been generally the trend with the metals and commodity stock. Once they are there in their bull phase, the bull phase evaporates very quickly. And from there, we get massive selling pressure as well. So that has happened with the entire metal space as well. So specifically, if I talk about Jindal Steel, again, we have seen a massive sell-off in the stock from the levels of 580. So almost the stock has half from the all-time high levels. So the trend remains again bearish for Jindal Steel. On the upper end, the resistance, what I see is at 365 levels. So as long as 365 is not taken out on the upside, I would not say to place bullish bets on Jindal Steel. On the downside, I'm expecting the stock to test the lows what it had made recently, which was around the levels of 300. So the view remains bearish. Resistance is at 365. My support is at 300.
Okay. Now, another stock from the metals pack that we want to address is NMDC. Ashutosh has sent us a query and wants your view here. Again, a steady decline from April highs, of 175 rupees odd. The stock is now sub 100 levels. Do you think this one is also likely to trade weak in the foreseeable future?
So as I said, NMDC, or whether it's a metal space, they have been looking extremely bearish on the chart, has given a clear-cut breakdown. And this pain is going to be there for the near term for the metal space. I think there are only few selective stocks such as Tata Steel, which I like from the metal space at the current levels. NMDC, again, the structure is very weak. But for a trading bet, if I say the stock is in a deep oversold territory, so a bounce or a pullback rally cannot be ignored from the current levels. So we need to have some positive setups which should happen at the lower end, a positive candlestick pattern, which has not been forming at the current levels as well. So the undertone remains bearish as long as we don't see any bullish formation. But as I mentioned, it is already in an oversold territory. Any rally could be an opportunity to sell. And if any bullish candlestick which have been forming at the current levels, that could be a tradable bet where the stock can test on the upside the levels of 110. So that is a massive resistance which the stock faces on the upside.
Okay. Next query is on Lemon Tree. Raj Arun wants to know your view here. And, last 3 months chart, if you see, in terms of returns, completely flat. It hasn't done much for its investors. But it has seen some, wild gyrations, and there have been some bouts of a bounce on this counter. Do you think this is going to be a trend, range-bound trade sort of a thing? Or do you see some action coming by here as well on the upside?
So I think the hotel stocks, what we were looking at, this was the unlock theme which was playing out. So there are a lot of stocks on the hotel space as well. Whether you talk about a Lemon Tree or a Chalet Hotel or a Taj GBK or an Indian Hotels. I think if I look at the sector-specific approach, the best place stock what I see is Indian Hotels, where the structure is very strong. Specifically, if I talk about Lemon Tree, again, the stock after a sharp rally has been consolidating in the range of 57 on the lower end and 70 on the higher end. So I think this is a consolidation phase, but I think this is a base formation which is happening for the next leg of rally. So I think my view remains positive from the current levels as long as 57 level is held on the downside. On the upside, the first level what I see is 70, which is my resistance. And if that is taken out, the stock is ready to fly towards the levels of 80 kind of a zone.
Another stock, another reopening play is PVR. Just like Lemon Tree, PVR is also witnessing a lot of increased footfall in terms of their business updates. But if we talk about the technicals also, it's seen a good spot last 1 month from 1680, 1690 levels to now I think 1922 is where it shut shop on Friday. So talk to us about the momentum here. Do you think the momentum is going to continue, or do you see some dips coming by which could provide opportunities to buy?
See, exactly. If I talk about the unlock theme, which because of the Russia-Ukraine crisis or on the inflation front, which started to happen, the market has forgotten the unlock theme. I think once the stability comes in, these are the stocks which are likely to outperform as well. We have been past the COVID levels. The COVID is over, and now we will see again opening up and ramping up of the economy as well. So I think PVR, I know these are the stocks which are likely to outperform. People are going to go to movies. That is going to be a trend which is there in India as well. So I think PVR has seen the worst in this bad times. And I think in the worst, the stock has done quite well. And now it is showing some strength on the chart perspective as well. So on the lower end, 1700 has now become a base for the stock. So till as long as 1700 levels is not taken out, the momentum remains on the buy side. The immediate hurdle on the upside is placed at 1900 zone. But I am expecting even that levels to taken out with volumes in the coming weeks as well. So PVR, my view remains bullish. I'm expecting 2000 to be my first level and 2100 to be my second level on the upside.
If we talk about discretionary plays, there's also Asian Paints that I want to flag off. We have a query from Atharva. He wants your advice on Asian Paints. And this one also last 1 month has seen a good, almost 300 rupees recovery for its investors, especially given that, there's been news and updates with respect to raw material prices cooling off, especially crude oil prices also, which have come off a tad. So talk to us about the technicals of Asian Paints and what do you foresee there?
So I think Asian Paint has been one of the most favorite street stocks as well, and recently it has been in a lot of news because of the raw material prices, as you mentioned, and even the crude oil prices which have gone up. So now we have seen a cool off on the crude oil prices, which is a positive for the sector as a whole, and Asian Paint is a leader. On the downside, the stock in the recent times has seen a good double bottom formation at the levels of 2625. So I think the base formation is already happening, and on the daily chart there is a higher high, higher low formations again, which is intact on the stock as well. So I'm expecting the stock to go towards the levels of 3,200 on the upside. That is a resistance zone. So the view from the current levels remains bullish. Lower end immediate support stands at 2872. So 2872 is the support zone, and I'm expecting 3,100 to 3,200 levels on the upside.
Okay, all right. One last query I want to ask again from the consumption space. This is Sharon's question. She wants your view on ITC, wants to know whether to buy at the current levels or to wait for some dip to enter the counter. And one question that the street has also been asking is that yes, it has seen a phenomenal 35-40% rally in the last few months, but that 300 level is something that it's refusing to sort of break out of. So talk to us about how the technicals look like, and by when can we see that 300 mark? When can we see ITC cross the 300 mark?
I think, Karuna, that would be seen very soon. The reason behind this is that FMCG as a sector was underperforming due to the inflation concern. You name it, any FMCG stock, they have been from the all-time highs were beaten down drastically. And it was ITC which was showing a reverse trend, which clearly indicate on technicals what we call as relative strength. When the market is underperforming, this is one stock. When the sector is underperforming and it is in a lot of pressure, this is one stock which is showing a clear-cut outperformance. So when things stabilize from the FMCG, which is on the FMCG chart, looking that everything has been priced in by the markets on the inflation front, FMCG is likely to do good in the near term. And if FMCG goes up, I think ITC would be the leader this time, where we can see much higher levels above 300 as well. So probably in this week also, I'm expecting 300 to be taken out. But this has been the case with ITC, that it keeps on consolidating for a quite bit of time, where it tries and tests the patience of investors and traders as well. But looking at the chart setup, I think 300 levels would be taken out. I'm expecting it to go towards the levels of 320 on the upside. So the view remains bullish from the current levels.
Okay, all right. And before we wrap up, Kunal, want to know what is the stock that's on your list and you'd like to recommend to our viewers?
See, I think, as I said, the momentum in the market is likely to continue. We are going to see some good buying actions in this week as well, as I'm expecting 16,600 to 16,800 levels on the upside for the Nifty index. Now, one stock which has been in my radar for the last week, where the stock was showing some great momentum as well, the name of the stock is Syngene International. Now, pharma as a space in the last week had seen some good buying momentum, and the trend has really been strong in the last couple of weeks. So there was a base formation which was happening, and now the follow-up rally has started. And Syngene International is a stock where I'm seeing some good volume-based action, a sideways consolidation which was happening in the stock for quite a long time. And finally, we have seen a breakout on the stock with massive volumes on Friday. And even if I add the derivative data to it, that is the open interest futures data, we have seen a massive long build-up which has happened in the stock as well. So I think a very good setup on a technical, plus the derivatives data is also supporting, where we have seen massive unwinding in 600 call as well, where most of the writers were there. So clear-cut unwinding on all the front options, whether it's derivatives, futures, or whether it's in the cash market. A great momentum that could catch up in the current week, and I'm expecting the stock to go towards the levels of 640, 650 kind of a zone. So definitely in a bearish form.
Okay, great, Kunal. Thank you so much for flagging off your pick as well. But we're running out of time, so we're going to quickly wrap up the show, guys. Thank you so much for tuning in. Stay tuned. Santo and CJ is coming up right after the show.